Hey YouTube, what's going on? Today we're going to be taking a look at two of the most popular electric vehicle manufacturers, NIO and Tesla. We're going to be comparing them side by side and see which one is a better buy opportunity right now. So if you're ready to find out, make sure to hit that like button, subscribe, hit that little bell next to subscribe to turn on notifications, and let's get into it. So before we get started, if you follow these two stocks, let me know in the comments below which one is your favorite of the two, either Tesla or NIO. So with that, let's take a look at the analysis we have so far. So right now, both companies are overvalued. Obviously, Tesla's trading around $600 a share. Its value is currently $175. NIO is trading at $45 a share with a current value of $455. But, that's okay. This just tells us that we are paying a premium for these stocks currently. With stocks being the only game out there right now, there's no surprise that we're going to be paying premiums on a lot of the big names. But let's continue to do our analysis a little bit more here. So starting off with Tesla, we can see it has great long-term potential over the next 1 to 3 years, has consistent fundamentals. They consistently beat earnings time and time again, but the timing here, 0.82, tells us it is in a steady decline. If we look at NIO, NIO has poor long-term potential over the next 1 to 3 years because it is a younger company. Also, the RS is just right below that level of 1, telling us it has about average amount of risk compared to the average stock out there. But the timing at 1.53 tells us it's in a really good, strong uptrend. So from a short-term basis, the main thing you want to know is momentum. Which stock is going up? Which stock is going down? Well, the RT tells us exactly that. So if you're a short-term momentum trader right now, NIO is clearly the best option to look at for yourself. If you're looking from a fundamental standpoint, clearly Tesla's been around longer. They have more of a proven track record, so they're going to take the cake on that. But NIO, because it's a little bit of a earlier development stage than where Tesla is currently, there is going to be more risk, but they have more upside potential. As we all know, there's been a lot of good news coming out from NIO. They had a little bit of a setback with the chip shortage recently, but they just announced a brand new factory that they're getting ready to start building, which is going to double their production size. And if you look at their current projections for the next year, they still have not reduced any of their current projections for getting cars out and delivering them, even with the chip shortage, even with everything that's been going on. So that's definitely a strong sign. It shows that they have faith and that they're going to be able to meet their numbers every single quarter, year after year so far. So if you're looking for more of that speculative higher upside potential play, clearly NIO is definitely the one you want to go with. It has more risk involved with it, but as the old saying goes, high risk equals high reward. Also, it does have that short-term momentum for you that helps you get started on the right footing. If you're waiting for that more prudent or more fundamentally sound play, such as Tesla, as we can see with the RT being at 0.82, that tells us we need to be patient. Right now is not the best time to be getting into it. We need to keep it on our radar, hold it in a watch list, keep an eye on it, and just wait for that prime opportunity to jump on board. All right, so now that we've got that, let's go ahead and take a look at the charts of these two stocks and compare them side by side as well. So we'll go ahead and graph all of them real quick. And starting off with Tesla, as we can see, Tesla had a phenomenal year coming up into 2021. But since 2021 has started, Tesla's had a rough time really getting back on track. We've seen a consistent pattern of lower highs here, which lower highs tends to lead to lower lows. And we've definitely seen those. But just recently, we're starting to see a little bit of a pause. We haven't quite broken this previous low set around March of 2021. So for now, we have the downtrend dissipating or slowing down a little bit, but we still have this long downtrend that we need to be aware of. So for everybody out there that's looking to get into Tesla, let's go ahead, use our extended lines. Love drawing lines on the graphs, helps us visualize things a little bit more clearly here. And what we're looking for is a break of that downtrend line. Until we have that, simply stay on the sidelines, keep the powder dry, and wait for that opportunity to come to you. Don't go try to chase the trades. Now, let's go ahead and take a look at NIO. So we'll just simply switch it to NIO. And we can see NIO also had a rough start to the year where we've seen a downtrend, but all of a sudden, where Tesla's been moving sideways, NIO has actually started to break out, taking out some of those previous highs here set around the end of March, middle of April or so. And that is a strong sign. From a technical standpoint, you have a breakout of previous highs. And just the opposite of what we said before, higher highs tends to lead to higher lows, which by definition puts it in an uptrend. Now, looking at these two stocks, we see some great momentum behind NIO currently. It's definitely seeming to rebound a lot faster than Tesla is currently. So from a short-term perspective, clearly NIO is the clear winner right now. Long-term is still yet to be determined. If we look at the technicals, we have DPO or detrended price oscillator, which is a great momentum indicator. Plus we have the stochastics, which is a great overbought, oversold indicator. Now, one thing I will point out here is the stochastics are in overbought territory, which means they're above a level of 80. And some may see that as a worry, but as I've stated in multiple videos in the past, just because it's overbought does not make it a bad play. It just means that you need to be a little bit more cautious and expect some sort of a pullback on a short-term basis, which if you're not already into it, that could create a great buying opportunity for yourself to buy it on the dip and then catch that next explosive move. So with that, let me know your guys' thoughts. Which one of these two stocks do you guys like better? Is it Tesla, which has the long-term track record, which has some of the biggest publicity out there for any major company? Or are you willing to take a little bit more risk for that potential for higher reward? You have a lot more upside with this one. It's at 45 compared to 605. So if you're looking for dollar-wise, NIO is also going to be your clear winner as well. One other side note, NIO also has a analyst projection of roughly $60 to $65. So based off of that, NIO has about a 33% upside move from where it's currently trading, which could present you a great opportunity or a great target to consider when looking at this trade or getting ready to enter the trade. So once again, leave me comments down below. Let me know your guys' thoughts. Which one are you a fan of more? NIO, more of the speculative play, or Tesla, more of the prudent play that has the proven track record already? So until next time, take care. Adios. Toodles.